Hey everyone, welcome to what I promise will be a very practical treasury presentation you'll see this year. I am excited you're watching because we are about to dive into something that's literally reshaping how companies manage their money. And I mean, right now, not in some distant future. Uh, but here's a question for you to think about first. Now, think about the treasury operations change you have seen in the past 3 years versus in the previous 10, right? I'm betting it's something that most of you have experienced. And if you haven't seen those changes yet, we are about to, because the treasury revolution is happening, whether we are ready for it or not. In this video, we are going to cover 15 different trends that are transforming corporate treasury. But here's the thing, I'm not just going to tell you what's happening, I am going to show you exactly how to use these trends to make your treasury operations faster, smarter, and more profitable. Now, your time is valuable, so let's make it very productive. We will So what we'll do is we will move through these trends quickly, but I will give you the practical insights you need to implement these strategies starting immediately. Okay, let's start with the big one, digital transformation. Now, I know what some of you might be thinking. Here we go again with the digital transformation talk. But stick with me because this isn't about buzzwords. This is about real money and real results. As we all say, cash is king. Now, think about this, artificial intelligence and machine learning aren't just fancy terms anymore. They are working in treasury departments right now, automating cash forecasting and spotting patterns that human eyes would miss. I am talking about companies reducing their cash forecasting errors, say, for example, by 30%. And that is not a small improvement. That's a competitive advantage. Next, let me briefly touch on benefits of cloud-based treasury management systems or TMS. And here's something that might surprise you. Cloud-based treasury management systems aren't just about storage anymore. They are about having real-time access to your data from anywhere, scaling up or down based on your needs, and integrating seamlessly with your existing financial systems. Next, let me share a result of a case study, right? I'll just share a quick example with you. A mid sized firm where a friend of mine works, I know, streamlined their payment processing using robotic process automation. They cut their processing time in half. Imagine what your team could do with 50% more time to focus on the strategy instead of manual tasks. The bottom line, digital transformation in treasury isn't optional anymore. It's the difference between leading and following. Okay, let's talk about real time payment systems worldwide and about the speed now. In real time payments, speed is everything. They are changing everything about how we think about liquidity management. Systems like FedNow in the US, SEPA Instant in Europe, these aren't coming someday. They're here now. Here's why this matters to you. Faster access to funds means better cash flow visibility. When you can see your cash position real time, you can make better decisions. It's that simple. But This is important. With greater speed comes greater responsibility. The faster the money moves, the faster fraud can happen. That is why companies are implementing multi-factor authentication and sophisticated transaction monitoring. Now, think of it as the security system for your financial highway. Next, let me talk about integration challenges and solutions. The challenge most companies face is integration within their existing systems. But the good news is that APIs and middleware are solving this issue or problem. You don't have to rip and replace everything. You can build bridges between your legacy systems and these new real time platforms. And here's my advice: start small, then first pick one payment process and test real time capabilities. After that, learn what works, and then you can scale up. Let's talk about ESG, environmental, social, and governance. Now, I know some of you might think this is just corporate feel good stuff, but let me tell you why it's actually a treasury game changer. Green financing options. ESG isn't just about being social responsible anymore. It's about access to capital, green bonds, sustainability linked loans. These aren't niche products. They are mainstream financing options that often come with better terms. Okay. Investor preferences data. Here's the fact that might surprise you. ESG focused investment funds now control trillions of dollars. If you want access to that capital, you need to speak their language. That means integrating ESG principles into your treasury operations. So, what are some of the supply chain ESG benefits? And it's not just about financing, right? When you work with suppliers who meet ESG standards, you're building a more resilient supply chain. You are reducing regulatory risks. You're future proofing your operations. The smart treasurers I know aren't asking, should I do ESG? They're asking, how fast can we implement it? Okay, digital assets, the new frontier. All right, so let's address the big elephant in the room: cryptocurrency and digital assets. I can almost hear some of you thinking, should corporate treasury really be getting into crypto? Here's my take. Whether you love it or hate it, digital assets are becoming part of the financial landscape, right? Cryptocurrencies, stable coins, and central bank digital currencies aren't going anywhere. Anywhere. So, about the corporate treasury applications, and now I'm not suggesting you put your entire cash reserve into Bitcoin, but forward-thinking companies are allocating small portions of their cash reserves to digital assets, and they're seeing higher returns. They're also using blockchain technology for faster, more transparent cross-border payments. Blockchain technology. In terms of risk management, here's the key: you need a robust risk management framework. Digital assets are volatile, regulations are evolving. You need to understand what do you call that? Anti money laundering requirements, compliance reporting, and regulatory changes that are coming up. And so, what would be the practical implementation steps? Practical implementation steps. My recommendation would be to start with education, of course. Uh, a greater understanding of technology is a must. Then considering stable coins for cross-border payments, they offer the benefits of blockchain without the volatility of cryptocurrencies. And I say don't ignore this space, but don't jump in blindly either. Be informed, be strategic, and be prepared. The option is available, but it's your call. Okay, cybersecurity, your digital fortress. Let's talk about something that keeps every treasurer awake at night: cybersecurity. The numbers are staggering. Cybercrime costs companies billions every year, and treasury operations are supposedly prime targets. So, what are some of the common attack vectors? Phishing attacks, ransomware, insider threats, and these aren't theoretical risks anymore. They are daily realities. But here's the good news: companies that implement proper security measures are stopping these attacks. One success story example, that there was a company that prevented a $10 million fraud attempt simply by implementing multi-factor authentication. Another treasury team stopped a phishing attack because they had trained their employees to recognize the warning signs. In terms of security best practices, the solution isn't just technology, right? It should be or it is a combination of secure payment systems, employee training, and constant vigilance. Encryption, tokenization, regular security audits, these aren't nice to haves anymore. They are must haves. So you got to have encryption, tokenization, and regular security audits, must haves. So, what is the action item? Uh, here's what I would do: review your current security protocols. Make sure your team knows how to spot phishing attempts. And if you don't have multi-factor authentication on your critical systems, implement them now. Your security is only as strong as your weakest link. So we can't really let that be. Global Treasury operations. Okay, for those of you managing global treasury operations, you know the challenges: multiple currencies, fluctuating exchange rates, complex regulations in different jurisdictions. It's like playing chess on multiple boards simultaneously. Then you have centralized versus decentralized models. The question every global treasurer faces, which which one? Centralized or decentralized operations? Centralized gives you better control and oversight. Decentralized gives you local flexibility and expertise. So, which one is the smart approach? I say hybrid models that give you the best of both worlds. How about the fintech solutions for cross-border operations? And here's where fintech is really making a difference. Cross-border payment solutions that are faster and cheaper than traditional banking, real-time currency hedging tools, uh, multi-currency accounts that simplify cash management. These are just some of the examples. So when you operate globally, what are your regulatory compliance strategies? Remember, with global operations comes global compliance. You need systems that can handle different regulatory requirements, the tax implications, and not to forget the reporting standards across multiple jurisdictions. And I believe the key is leveraging technology to standardize processes while maintaining the flexibility to adapt to local requirements. Let's talk about working capital optimization because this is where small improvements can have massive impacts on your cash flow. Supply chain financing is one of the most underutilized tools in Treasury. I heard by offering early payment options to suppliers in exchange for discounts, you improve their cash flow while reducing your own costs. It's a win win that many companies are believed to be missing. Then there is dynamic discounting. Discounting takes this further, adjusting discount rates based on payment terms and your cash position. And it's like having a flexible dial you can turn to optimize your working capital in real time. Just to talk about a case study, I've seen companies improve their cash conversion cycle by 20% through supply chain financing. And a retailer I heard reduced their working capital requirements by optimizing inventory levels and payment terms. So how about the implementation roadmap, right? The beauty of working capital optimization is that it doesn't require massive technology investments. You can start with simple supplier payment programs and build from there. Okay, regulatory compliance and staying ahead, right? Regulatory compliance. So it's not the most exciting topic, but it's absolutely critical. Basel 3, IFRS 9, anti money laundering rules, these are regulations. They are not suggestions. They are requirements that can make or break your operations. But the good news is, though, technology is making compliance easier, I believe. So, automated reporting tools can generate accurate, timely reports without the manual effort. Regular audits and training can be systemized and tracked. And what can you expect uh, for future regulatory trends? I believe it's coming. The increased focus on ESG reporting. So expect more regulations requiring companies to disclose ESG related data. and the companies that are preparing now will have a competitive advantage. Um, how about compliance strategy? In my advice for compliance strategy framework would be don't wait for regulations to hit you. Build compliance into your processes from the start. Use technology to automate where you can and invest in training to handle what you can't. Compliance isn't just about avoiding penalties, it's about building trust with stakeholders and accessing better financing terms. Now, let's review scenario planning and preparing for the unknown. The past few years have taught us one thing: the unexpected will happen. So, economic volatility, geopolitical risks, global pandemics, and these aren't once in a lifetime events anymore. That is why scenario planning is becoming essential. It's not about predicting the future, right? It's about being prepared for multiple possible futures. So, what if interest rates spike? What if supply chains are disrupted? What if regulations change overnight? That type of stuff. What about the predictive analytics tools? Now, AI driven forecasting tools are making scenario planning more sophisticated. Now we have AI tools available, and these tools can analyze historical data, market trends, and external factors to provide more accurate predictions. And then there are real-time dashboards, which real-time data visualization is crucial here. So dashboards that show key metrics, stress test results, and scenario outcomes that help you make faster, better decisions when things start moving quickly. I know companies that navigated the COVID 19 pandemic successfully because they had robust scenario planning in place. They had already thought through, say, liquidity crises, supply chain disruptions, and demand volatility. And how about those companies that struggle? Those companies that were not prepared, they were caught off guard and had to react instead of respond. Let's talk about fintech and why partnering with the right fintech companies can accelerate your treasury transformation. Fintech companies are offering solutions in payments, liquidity management, fraud prevention, and analytics that are often more advanced than traditional banking solutions. And so they are nimble, innovative, and focused on solving specific problems. And there are benefits to partnership. The benefits are clear: access to cutting edge solutions, improved operational efficiency, and often that means lower costs. But, and this is important, not all fintech partnerships are created equal. So, following a strict partnership selection criteria is pretty important. So, when selecting fintech partners, you need to evaluate their track record, security measures, regulatory compliance, and financial stability. A great solution from an unstable partner can be a liability. Just remember that. Now, you also have to consider security. Data security is paramount. Make sure your fintech partners have robust cybersecurity protocols and can meet your compliance requirements. The key is really finding partners that complement your strengths and address your specific pain points. The decentralized finance or DeFi is probably the most experimental area we will discuss today. It's blockchain based financial systems that enable peer to peer lending, borrowing, and investing without traditional intermediaries. For Treasury, DeFi offers opportunities for yield generation, earning interest on digital assets, and access to decentralized liquidity pools. Some companies are already experimenting with this, but let's be clear about the risks, right? Regulatory uncertainty, security issues, and scalability issues. And DeFi platforms have been hacked. Regulations are still unclear, and the technology is still maturing. And so, what would be the practical approach? And my recommendation would be to watch this space closely, but proceed with extreme caution if we were to experiment it or try it out. Let's talk about something that's often overlooked but absolutely critical, which is talent development. The role of treasury professionals is evolving rapidly. Today's treasurers need skills in technology, data analysis, and strategic thinking. It's believed that there is a skill gap in the market. It's also believed that companies are struggling to find people who understand both the treasury, traditional treasury and modern technology. This is both a challenge and an opportunity. So, building high performing teams requires investment in leadership training, diversity initiatives, and career development programs. The companies that invest in their people will have a competitive advantage. Retaining top talent is crucial. Therefore, offer opportunities for growth, recognize achievements, and create an environment where people want to stay and contribute. In my advice, I would say invest in training for your current team, send them to conferences, enroll them in courses, and give them opportunities to learn about new technologies and trends. Your people are your most important asset. Invest in them accordingly. Let's talk about APIs and open banking, the connected treasury. So APIs and open banking are creating a more connected financial ecosystem. APIs enable seamless integration between banks, treasury management systems or TMS, and ERP systems. And as far as the benefits of open banking, the open banking gives you real time data access and interoperability. You can access up to date information across multiple platforms without manual data entry. But how about the implementation challenges? The challenges are data privacy and security concerns. So you need to ensure compliance with data protection regulations while taking advantage of the connectivity benefits. This is a foundational technology that will enable many of the other trends we've already discussed. So, supply chain finance, the win win solutions. What does it do? Supply chain finance creates financing solutions that benefit both buyers and suppliers. So, early payment options, extended payment terms, and improved cash flow for everyone involved. How about the benefit to Treasury? For Treasury, this means improved working capital management and stronger supplier relationships. And companies are believed to be reducing their working capital requirements by 15% or more through smart supply chain finance programs. Retailers can improve supplier relationships by offering early payment options, and manufacturers can reduce working capital requirements through strategic payment terms. Now, this is low hanging fruit that many companies may not have yet picked up. So, what does the future hold? The future of Treasury. The trends we've discussed aren't happening in isolation. They are converging and reinforcing each other. AI driven forecasting combined with real time payments and digital assets, ESG requirements driving fintech innovation, cybersecurity enabling digital transformation. See, these trends are creating a new treasury ecosystem. Now, add geopolitical shifts to the mix to get supply chain regionalization, currency volatility, changing trade relationships, and you have a complex but exciting environment for treasury professionals. Uh, the key to success is to build resilience and adaptability into your operations, right? Having systems that can handle multiple scenarios, teams that can learn and adopt, and strategies that can evolve with changing conditions. And this requires a commitment to continuous learning and innovation. The financial landscape is changing too quickly for anyone to rest on their laurels. The corporate treasury team who will thrive are those who embrace change, experiment with new technologies, and continuously improve their operations. Okay, so let's recap the key trends we have covered in this presentation or in this video. So, digital transformation is accelerating decision making and efficiency. Real time payments are improving liquidity management. ESG is opening new financing opportunities. Digital assets are creating new possibilities for cash management and payments. Cybersecurity is protecting our digital future. Global treasury operations are being streamlined through technology. Working capital optimization is driving cash flow improvements. Regulatory compliance is being automated and systemized. Scenario planning is preparing us for uncertainty. Fintech partnerships are accelerating innovation. DeFi is creating experimental opportunities for us. Talent development is building our future capabilities. APIs and open banking are connecting our systems, keeping our systems together. And supply chain finance is creating win win situations or solutions for all of us. So, all of these trends are converging to create the future of treasury. And so, as a implementation roadmap, if there is a need, of course, everybody does, right? All of us do. So here's what I would do to start immediately. So the first thing that I would do is review trends that most directly impact your operations. Number two is identify specific actions you need to take and can take in each area. And number three would be I would set a timeline for implementation. And number four, uh, I would measure my progress and adjust as needed, right? And as far as community and resources goes, I would say uh, remember not to go it alone. You're not doing this alone, of course. Connect with other Treasury professionals, attend conferences, join online communities, and most importantly, keep learning. And I mean, as a final thought, I would say the future of Treasury is being written right now, and you have the opportunity to be part of that story. So don't wait for that change to happen to you. Be the change agent in your organization. The tools and the strategies we have discussed in this video today aren't just theoretical concepts, they are practical solutions that you can implement to make your treasury operations more efficient, more strategic, and more valuable to your organization. And I want to thank you for watching. I hope this presentation provided valuable insights you can apply to your own treasury transformation journey. And now I would love to hear from you. So please tell me about what challenges you are currently facing, and also about the opportunities that you are mostly or most excited about. Share your thoughts and questions in the comments, and let's keep this conversation going.